What up, y'all? So this is how you could have caught the low of day today on the NASDAQ and caught over 100 points. So if you were trading 5 micro contracts, you could have easily made $1,000 on this move. If you're trading a mini, you could have made 2,000. 100 points is a lot on the NASDAQ. So let's get right into it. So the first thing you'll notice, if you look on the daily chart, you'll see yesterday, Monday, we had a huge sell-off, right? We gapped down and then we had a huge sell-off because of the AI stuff that had came out. And we ended up rallying and closing pretty much higher than, that entire daily range, right? So we closed about in the middle of that daily range towards the end of the day. So anytime a candle, especially on the daily chart, closes with a huge wick like this, what you want to do is grade this wick out, right? You want to put a Fibonacci retracement and figure out what the different quadrants of the wick are, because a wick is essentially like a fair value gap, right? And so you can treat them the same as you would a fair value gap when you grade a fair value gap, right? And you can find the midpoint, which in this case, the midpoint of a wick is just like the midpoint of a fair value gap, which is consequent encroachment, right? And then you would also want to mark your quarter levels, right? So you have your 75% and your 25% levels as well. So you can see this was a huge wick from 302 down to what, 800. That was a 500 point wick from yesterday's daily candle. So you definitely want to know where those different quadrants are going into the next day, because generally the market likes to use those different quadrants as potential discount or premium arrays to trade off of. So in this case, because the wick was on the bottom side of the candle, right, that means this is a discount wick, right? So we have discount arrays below us in which the market could potentially use to bounce and trade off of. So that's the first thing you wanted to note going into the day. So if we go to a lower time frame, so here on the hourly time frame, this is how the market looked going into the New York opening session hourly. So you can see that we had quite a bit of liquidity above and below us. So you can see here we had some sell side liquidity from Asia lows, right? This was the 9 p.m. low from last night. We had that as sell side liquidity. So we'll go ahead and mark that. And then we also had some sell side liquidity here at 12 a.m., right? We can mark that too. And then we had some buy side liquidity above us. So we can go ahead and mark that as well. Every time you open your charts, that's the first thing you should be doing, is identifying where your liquidity is. And the next thing you want to be doing is identifying where your imbalances and inefficiencies are. So you can see above us, we had a sell side imbalance, buy side inefficiency, a bearish hourly fair value gap that the market had traded into at the 8 a.m. hour. And then we didn't really have any discount arrays below us, but we did have that. And then we had this hourly Sibia as well above us. So those were the important imbalances going into the New York opening session at 9 a.m. So if we look at our, if we go look at our lower time frame here, you can see going into 9 a.m., it looked like the market was more than likely going to draw into these lows here before potentially trying to go higher, right, to reach for this buy side, because we had just taken this liquidity from yesterday's New York session high, right? This was that same one that we saw in the hourly. I didn't mark it, but that we had just taken buy side liquidity at 5 a.m. this morning. So because we had just come from that liquidity, now we're likely going to trade into this liquidity here from the London and Asia session lows. So that's generally what the market does. It trades from liquidity to liquidity. So if we take external liquidity, we're probably going to go take external liquidity while taking internal liquidity along the way, right? So going into the 9 a.m. hour, we had formed some additional liquidity here. You can see we had this high here, right? This was internal liquidity that you want to be aware of. And then we also kind of just traded around, right? We took this internal liquidity here, traded lower, back into this range. And then once the market opened, you can see we immediately traded and took this internal buy side liquidity at this high and then traded down into this liquidity here at this low into our liquidity down below us. So you can see this was a really clean move down into the lows this morning. So going into the 10 a.m. hour, we were still respecting all of these bearish premium arrays. So there was never really any reason to think at this point, although we swept liquidity, there was no reason to think we were going to go higher until we validated some sort of change in state of delivery and we're disrespecting some of these bearish fair value gaps. So the market continued to trade lower. We formed another imbalance here, right? So we had been still respecting, you can see we respected this imbalance. This was the first presented fair value gap at 931. We respected this one, 934. We formed this one here. And then that one actually was respected as well, almost to the tick, right? We traded into it and then traded lower. And then you can see the market came down and ultimately traded into that discount of the range from yesterday, right? That quarterly portion of the daily wick from yesterday. So from this point, you can see now, again, there's still no reason to be, anticipating any higher prices right here, right? We're still respecting bearish order flow, right? So the market is still going down. However, what you do notice is we do begin to now, disrespect now this sell side imbalance, buy side inefficiency, as well as form a change in state of delivery here. Once you see this, now this is indication that the market is looking to reverse, especially when you see these big candles, right? This was a 44.1 minute candle. When you see that, that is indication that we are about to reverse. This is displacement, right? All of this is manipulation, smart money accumulating their position into a higher time frame discount array, which was the 75th percentile of this discount wick from yesterday. And now we were disrespecting these bearish fair value gaps. So at this point, this is very bullish order flow, right? And so now from here, we form a buy side imbalance, sell side inefficiency, our first bullish fair value gap of the day, right? And so now at this point, we have now disrespected this fair value gap, and formed a bullish fair value gap. We swept the lows from the Asia session last night into a higher time frame discount array. This is a safe long opportunity to target internal and external liquidity here, and even potentially here at our buy side liquidity at 420. So you could have taken a long here off of this bullish fair value gap, right? Stop loss below this order block, this down lows candle, or if you don't want to be that aggressive, below this inversion, or potentially even below this buy side imbalance, sell side inefficiency, targeting internal liquidity here, or even external liquidity all the way here at buy side. So, but I always say go for the low hanging fruit, which to me is this internal liquidity at the 1 hour bearish fair value gap that we identified going into the market, right? So you could have now waited for the market to trade into this gap. And then once we did, you could have bought here, like I said, with your stop loss below here, risking 300. If you had 5 contracts to potentially make $1,100 on the NASDAQ. So you can see at this point now we want to see, do we respect bullish order flow, right? So we trade into this gap, we take our buy there, and now we want to see, are we going to be able to invert this fair value gap here, right? And use this as now support. So you can see we form an order block here, right? This is an order block that the market ends up bouncing off of this down close candle. And then we also form another order block above us. We come down, trade into that order block. And now we get efficient delivery right into this high, right at 10 a.m. whenever the data came out. So you can see this was a pretty quick trade. I mean, 9:54 to 10:03, 9 minutes, $1,100. I mean, again, Which job is paying you that? I don't know of any, but you know, if you do, then hey, I guess you probably not even watching this video. The same thing I'm looking for every single day happens, right? You want to see, is price respecting which side of the order flow? Is it respecting bullish or bearish order flow? And then where do you expect us to now begin to disrespect bullish or bearish order flow and now respect the other side of the order flow, right? So knowing that we were having all this liquidity below us and we had this higher time frame discount array below us, as soon as we traded into that, right, and formed this, essentially what's a breaker, right? We had this low, high, lower, low, higher, high. That, and then we see this bullish order flow begin to open up. That is indication price is going to reverse, right? Don't guess what price is going to do, right? A lot of people will try to come in here and, oh, I'm just going to long, you know, once we sweep liquidity, I'm going to take a long here at this discount of this wick at 21,168. Yeah, it could have bounced, but you don't know it's going to bounce, right? You're guessing here. Let price show you. And if you're on the right side at the right time, you will not withstand a ton of drawdown, right? That's the key. Timing is key. We were in the 950 macro at this point in time. Anything below this was all from here to here. This was all outside the macro, right? But as soon as the macro opened, what happened? Order flow changed from bearish to bullish right at 950. The 950 to 1010 macro always has strong moves typically, right? I'm not going to say it's always great, but a lot of times it has strong moves. So it's a great opportunity to catch the morning you know, move in the New York session. So this trade ultimately ended up, you know, running even higher. Again, do we respect bullish and bearish order flow? We trade into this bearish fair value gap here, right? And then, you know, we begin to disrespect this bearish, we trade into this bullish fair value gap. We disrespect this bullish one, or this bearish one, I'm sorry. And then we again begin to trade higher and ultimately into the buy side liquidity that we had identified from this morning. So this was a great price action day, very clean moves, no reason to really ever, you know, get shaken out. You know, another great trade opportunity was actually this one too, because this was an SMT, right? So ES made a higher low here while the NQ traded into this higher time frame gap, right? We inverted this gap here, right? So this, again, this is the same model that I just showed down there, right? So you can see this is very, very clean. It's the same thing every single day. We get a change in the state of delivery here, right? Come and retest this high. And then from there, price literally just rips higher, right? So you could have taken, you know, if you missed the move down there, I personally, you know, don't think I would have taken this, but you know, you could have taken a buy here, stop loss below this fair value gap, targeting this liquidity here, right? 64 points for risking 26 points. Great risk to reward, targeting this external liquidity that we identified this morning. So many great opportunities today. It's just all about knowing how to read order flow and knowing what side of the market to be on at what time. So this is how you could have bottom ticked. You can see this was ultimately the low of day, right? We didn't make any low from here. This was the low of day. And you could have held this all day long and the market just ripped higher for the rest of the day. So that's genuinely my model every single day. Those are the things I come into the market and look for and come to see. So if you have any questions, put them down in the comments below and I'm happy to answer them. Other than that, I will see y'all in the next video.